So,
Yes.
introduction. My name's Oliver. I'm actually from the UK. I originally studied electrical engineering in the UK, and I've since been involved in quite a few startups. And I was also previously the quant lead at a crypto fund here in Berlin, where we were looking at order book data and reinforcement learning. Had quite an experience of a number of different parts of trading, looking at technical analysis, looking at order books, even looking into alternative data, and found that there's a whole lot of information out there, and it's hard to decipher what's actually useful. This is something I found difficult, but very interesting. And how did I get involved in trading? So I initially got interested in predicting concrete maturity over time, very randomly, and started by basically reviewing my university stats courses, and also looking into neural networks, and went very deep into learning about deep learning, and realized in 2017, around the end of 2017, that first of all I had some Bitcoin, and secondly I could definitely use what I've learned for trading. So later on, got very deep into reinforcement learning and crypto trading, and this is hard. This is a very hard thing to do, but it's not impossible. But there are three big problems with it. Firstly, that there's not enough data available on the market. This price data, this open close high low data, is just too low fidelity. And secondly, the only data with enough fidelity, so particularly order book data, requires really big and expensive infrastructure. And this is a really hard thing to manage, trying to deal with all of this data. And so these are two things that are really actually very challenging for not just for professional traders, but also for people doing this at home or amateur traders. Obviously, also interfacing with exchanges. This is a really difficult thing to do well. Quite often, the exchanges will shut off. You have these problems with BitMEX where you're fully long, and then suddenly you can't make any trades, and the price just goes down. So it's basically very risky. But the biggest problem is data. And around the end of 2018, I met these guys at Augmento and realized that what they had was very interesting. Started looking into sentiment data and actually joined the company in early 2019. And what Augmento does is they, as you said already, we quantify sentiment data on social platforms like Reddit and Twitter and Bitcoin Talk. And this data for me answers at least two of the big questions I had above. Firstly, the data is really high fidelity, and secondly, it's data which allows you to train on timescales that don't require crazy infrastructure. You're not getting sentiment data building up over seconds or minutes. It really takes days. And so it means you can trade on days, whereas with order book data you're trading on seconds to minutes.
Oliver, quick question from my side.
Sure.
Why do you guys see sentiment data so important in crypto trading? And since you're coming also from what I understood, traditional finance side, where do you see a difference here in the crypto trading space and the normal trading space when you look at sentiment data from social media, especially?
Yeah, so I think it's fair to say that the crypto world really was built on top of a lot of these platforms. So if you look at how, for example, Bitcoin or Ethereum or many of these smaller coins, these altcoins, were actually developed. People were communicating about them, about how they were developing, and people were exchanging news about how they were developing on these platforms. I said before that these platforms are like a petri dish for this technology. And so there's really never been such a strong tie between an asset like crypto and the communication platform, like for example Reddit.
So the information you find on all these social media networks is basically a mirror of what's currently happening in the crypto community.
For sure.
Okay. Right.
It's a very, very good monitor for what's actually going on at the time, and how people are feeling about the space. And it's the largest number of people are actually on there. So yeah, it's a super good way of monitoring the space.
Interesting. Okay, thanks. Please.
Yeah. So as I said, I mean, crypto is really driven by social sentiment. Everything that happens in the crypto world is reflected in these platforms. And actually, when you think about it, it's a new club. The people who are engaging with this world are a new kind of investor. They're people who historically would never have been able to invest into this kind of really, really high-tech stuff. And suddenly they are, and they're not just able to invest in it, but they're also able to talk about it with each other. And so, how do we do this? As we say, we quantify the market psychology and measure, it's actually almost 100 topics and emotions on crypto social media in real time. So, for example, emotions like euphoria or panic, and topics like hacks or exchange listings. What's an example of the kind of data we monitor? So here, someone on Twitter has said that they bought Bitcoin last week, and should they have put more in, or have they met a trend? And our system would label this as being FOMO, so fear of missing out. It's about buying, and obviously it's about Bitcoin. And we aggregate these data points over minutes or hours or days, and we serve them through a simple RESTful API. And just to show you some of the other topics and sentiments that we look at, here's a kind of flower of our topics and sentiments. So you can see that sort of sentiments, things like FOMO or bearish, or about the market, about the technology. So we really capture the full kind of market psychology. It's not just positive and negative, it's every kind of emotion and every kind of topic. Yeah, so we're the only provider who's able to do that, who's actually able to quantify the entire market psychology. And I guess most importantly, it's very easy to use. So the data is set up in a way that if you can interface with an exchange, you can very easily interface with our API. So yeah, I finished the introduction. Let me carry on with the talk. So we're going to start by getting some of our data and playing with it. Looking at what it looks like, what we can see in the raw data, see how helpful it is for actually making a strategy. And then we'll look at how we can actually build a strategy on top of that. Obviously, we're going to have to do some data processing to do that. Pretty simple data processing, but we still have to manipulate the data. And then finally, we're going to backtest it in a very simple backtest, which I should emphasize doesn't actually, which isn't totally true to the market, but it's a good model of the market. It's a good basic model of the market. I should emphasize actually at this point that this is very simple. We're just using Python. It's all of the code which we've got down here is also available on our public GitHub repository, and you can just go on there, clone it, and set it up and try using it yourself. So I'd encourage anyone to do that.
Okay, just a quick comment here. So for everyone who's non-technical, Python is a super easy programming language. In order to follow the steps that Oliver is going to present here, it's probably just going to take you 1 or 2 weeks in learning Python. And then you guys can go on and play around with the data and find correlation in that data yourself. All right.
Yeah.
Thanks, Oliver. Please carry on.
And if you have any questions, let us know. So let's start by importing some of the libraries that we're going to use. So this is just a few things that help us run the experimentation to get the data and to plot the data. So we'll import those. And our data is all available via REST API. Up until 30 days ago, it's free and open and public. You can just go on there and get it yourself. And it's very, very similar to the Coinbase and the BitMEX APIs. So it's very easy to compare our data with price data from these exchanges. Let's start by getting a list of the coins that we look at. So here we've done an API request, and we're printing the result of that. And we can see all the coins. So Bitcoin, obviously, we've got Ethereum there. We've got Bitcoin SV, Bitcoin Gold, Bitcoin Cash, Neo, Steam, and we're actually tracking not just the top 50 coins by market share, but the top 50 coins by how serious they are, how likely they are to last. So these are really the top 50 serious coins in the ecosystem.
So you guys probably also measure that on how many people contribute to that project currently. I mean, I think all of these projects are open source, right? And then you can see how many contribute, how active the community is. So I guess you guys select also projects that you evaluate as being very sustainable and long-standing for the future.
Yeah, that's right. Yeah, we've invested a lot of time into building this platform, and we don't want to monitor coins which are not going to be around in 5 or 6 years. So we've got our coins, and now which sources do we look at? So we actually at the moment we look at 3 sources. We look at Bitcoin Talk, we look at Reddit, and we look at Twitter. And actually, something that a lot of people ask us about Twitter is how do we filter out the noise? We tried a few things, and we found the best way is to actually just look at the top 5,000 contributors on Twitter. So we ignore all the bots, we ignore the manipulative posting. And we're just looking at the kind of top 50 most reputable tweeters. Reddit, we look at a broad selection of different boards, and Bitcoin Talk, we look at almost all of the boards. So those are our sources, and then bin sizes. So this is how we aggregate our data. In this case, we aggregate over 1 hour or 24 hours. We also have live data, which is available every minute, and that's available on our WebSocket, but we won't look at that right now. And then the topics. So this is the list of all of the topics in the center you look at, and you can see it's quite a long list, 92 entries, and we're looking at really, as I said, the broad range of the crypto jargon. So hacks, ETFs. Obviously bullish, holding, ICOs, buying, scam and fraud, and then negative and positive. So it's really a very broad range of different topics and sentiments. and we look at all of the same topics and sentiments for every coin and for every source. And so finally, we've got our topics and sentiments, we've got our bin size, we've got our source, we've got our coins. Finally, what does the data look like? So here, we're interested in Twitter, and we're looking at Bitcoin on Twitter, and we're looking at a bin size of 1 hour. So every 1 hour, we're looking at new data, and we're looking between the 1st of April and the 6th of April. And let's see what that looks like. And you can see we've got a list of these counts, and each of these numbers here corresponds to one of the topics or sentiments here. So for example, negative is the last element in this list, and that corresponds to the last elements in this list. So here we've, over this hour, between midnight of the 1st of April and 1 o'clock, 1 a.m. the 1st of April, we had 39 negative tweets on Twitter about Bitcoin. So yeah, so that's our raw data. You can probably get the feeling that it's not very obvious how to use this. It looks kind of complicated. So how can we view this in a way that it kind of makes a bit more sense to us? So let's have a look at it. Let's start by graphing it. So I compared some data earlier, some Augmento data for Twitter and Bitcoin, and also some BitMEX data for the XBT USD pair, and prepared that for the last 2 years. And let's graph it and see what it looks like. Here we're actually going to look at the bullish sentiment and the bearish sentiment. So I'm loading that, and then I'll plot it. So in this case, I'll just plot the raw bullish signal. And here's what it looks like. Here we've got price. So this is the price over the last 2 years. I'm sure that's a graph that you're very familiar with. This is the dollar price there, so it goes up to about $20,000. And here we've got the raw bullish sentiment data. And this is a normalized value, so it's roughly between 0 and 1. And on the x-axis we've got time. And this looks pretty noisy. It's very, very difficult to see whether any of these peaks here correspond with any movements in the price. So we clearly can't use this. But let's zoom in. Let's zoom in around this area here where the price starts moving up and see what that looks like. Here we go. And so you can see we've zoomed in on the price here. So this is just now around 3 months from the 1st of April, 2019. And here you can see the data looks a little bit more interesting. This is the same data as the data above, but it's still very noisy. So what can we do? How can we make this look more useful? Well, something that one of the first things you would do with noisy data is smooth it. So you get rid of the noise. And we're going to do exactly that. So we're going to use a simple moving average to smooth this data with a rolling window of 42 hours. And we're going to see what that looks like. So here we'll smooth it, and we'll plot it. And so we've got the same price as above, but this time we have a signal which looks much more interesting. So here we've got this really noisy signal, really not obvious what's going on. And here it's much more interesting. You can see it moving up, maybe when the price is going up, and also maybe moving down when the price is going down. So I'll just let you take that in for a minute. So how can we use this data to actually create a strategy? How can we create buy and sell signals from this data? By itself, it's just not useful. So we'll start by making absolutely the simplest trading signal that we can possibly create. This is called the simple moving average crossover. So this is the bread and butter of many quants. It's pretty much the first thing you would learn as a quant. And you're taking two moving averages of a signal, and you're looking at when they cross. And when they cross, it's an indication that you should buy or you should sell. So the signal that we're using for this is the ratio of the raw bullish signal to the raw bearish signal. So when the bullish signal is high and the bearish signal is low, this ratio is obviously high. And when the bullish signal is low and the bearish signal is high, this sentiment ratio is low. So we create the sentiment ratio, and then we take a moving average of that sentiment ratio, a fast moving average. So that's a moving average which is going to move fast. And then we take a slow moving average, so a moving average which is going to move slowly. And we've created these signals, and what do they look like? We can actually plot them and see what they look like. So here again, we've got the price you recognize above, and here we've got our two moving averages. So the blue one we have here is the fast moving average, and you can see that's moving up and down around the orange one, and the orange line is the slow moving average. And we're interested in where these lines cross over and whether the blue is above or below the orange line. And when the blue is above the line, we can say it's a bullish signal. And when the blue is below the line, we can say it's a bearish signal. And create a buy and sell signal based on that, or a long short signal based on that. So here you can see when the blue signal is above the orange signal, the strategy outputs a long signal. And when the blue signal is below the orange line, the strategy outputs a short signal. And this is pretty interesting. As you can see here, the blue line rises above the orange line just before this sudden rise in the price. And so we can see that we would have made money over this long period here. Here it's not so good. So here we've got this very strong short signal here when the price looks like the price was actually going up there. But then here we've got another strong short signal here just before the price goes down there. And so it looks like it might be promising. We have the signal. So how can we figure out whether this actually makes sense? Whether this is something that's worth it? Can you cut it there? Because I'm being kicked out of this meeting room.
All right, we just quickly had to stop the recording because Oliver quickly had to change rooms. Basically been kicked out of his previous one. But it's all good. We found a new one, and Oliver can carry on. Please do so.
So as I was saying, we've created the signal now. So we've got this the signal which says whether we should go long or whether we should go short. And having got this, what does it look like? How can we see how this will perform in a backtest? So let's do that. Let's run a backtest and see what happens. So we can create a simple backtest by just taking the price over time and looking at whether the buy signal is above. Sorry, the buy sell signal is above 0, in which case we go long. Or if the buy sell signal is below 0, in which case we go short. And then if the buy sell signal is 0, we just hold. We can also add fees to this test. So we'll run that. We'll look at our buy sell signal again, and then let's plot it and see what the results look like. And here again, you can see the price over time. You can see the long or the short, and this is I should add actually that this is indicating that we're fully long with one-time leverage over this period, and here we're fully short with one-time leverage. And And here we've got our P&L. And so we can see that when the price rose there, we were fully long, and that the price and our P&L also rose. Here, where it made a kind of bad decision, it was short when the price was rising. We lost some money. But then here again, during this rise, we were long, so we made some money. And here the price is short when the price fell. And so that was also a good decision. Yeah. So that's our backtest. I should add that it is a simple backtest. There are many things you can do to improve it, but it's a good indicator that there's some signal in the data that we provide. And so yeah, thanks a lot for listening.
Well, one second. I'll in the name of the audience, I will ask a few questions.
Oh yeah, please.
So I guess. Oh, is there something you wanted to show?
I should just add that having looked at the data, having looked at the last 3 months, we can see that the backtest performed pretty well. But actually, what does it look like over the last 2 years? It could be overfit to this period. And if we look at that, we actually do pretty well. So we can see that over the past 2 years, this is from the beginning of 2017 until now, we made lots and lots of trades. And over the period until this is around the beginning of 2018, the P&L was kind of okay. And then over the period from the beginning of 2018 to now, we actually did really well. And so here you can see we've started with 1 Bitcoin, and we've traded up to around 8 by now. So yeah.
So that's an increase of 800%.
Yeah.
Great. So, as I understood, this is just one of many different combinations of sentiment topics that one could sift through in order to find correlations, or in order to find signals that will help them to decide if they should either go long, short, or hold the coin.
That's right. Yeah. Yeah. So we're looking here at bullish and bearish, but you could look at bullish and negative, or positive and bearish. And actually, if you were to look at all of the possible combinations, there are actually over 8,000 possible combinations of topics and sentiments you could look at.
Wicked. As I understood, you guys have even done some research on your own. That you, I think, published on the website about interesting topic combinations and how they performed over a certain period of time. Could you scroll down a little bit, I think?
Sure, yeah.
There we go. Yeah. So anyone who's interested should definitely check out Augmento's website and check out the research they have done so far. And I'm pretty sure there will be even more interesting research coming out soon.
Yeah.
And also this vast amount of topics that you guys tagged, categorized, and segmented the entire social media space into will be explained in your API documentation, if I got that correctly.
That's right. Yeah. So yeah, as you said, I would highly recommend checking out our website. We do a lot of research into the kind of work I've been talking about above, but also into more discretionary trading stuff. So looking at, for example, how sentiment towards Tether kind of works with the price of Bitcoin. Also, our API is open. Our data is available up until the last 30 days. It's free to download. You can download it. You can plot it. You can play with it. You can make your own strategies based on it. And also we're constantly outputting research that we're doing. And in fact, one of the things we're doing right now is we're using neural networks to make price predictions based on our data. So that there's tons and tons of stuff. So I'd really recommend looking into what we're doing.
That sounds great. And I think I should also point out, if you guys have any questions, just shoot over an email to Oliver. You can see his email over there. But please don't spam him. Oliver is a very busy guy. It took me 2 weeks to get him for this meeting. All right, Oliver, that was a wonderful presentation. In the name of our community, I give you a big thank you. And I hope that we're going to get you over soon to our next event and that you can connect again to our community in person. So
sure.
Thanks a lot for this.
Thanks for having me. It's been great.
Great, Oliver. I wish you a very nice day and we're going to talk soon.
Awesome. Thanks a lot.
Cheers.